Hello, this is Chad McMahon with Protect with Insurance. I'm here in beautiful Prescott Valley, Arizona, talking about life insurance. And for this video, I've got a client who saw some of my videos and she asked a question. She wanted to understand a little bit better. I had touched on it in the appointment with her, but she touched on it back, and she said, can you describe more about the health ratings that you can get with life insurance, and how does that impact pricing? Can we do better than what we have? And so it's a great question because it opens up a whole bunch of answers. But the short version on it is, what a health rating means is, let's say you're looking to get a term policy, which is generally going to be a larger life insurance policy. Term policies require more health, a higher degree of health. So you have to be, generally speaking, this is not a firm rule, but generally you need to be 3 prescription medicines or less. Generally, but there are many exceptions to this one. Generally, you're looking at 60 years old or less. But, again, you can go up to 80 years old, technically. It just starts to get very expensive, and you have to be in prime health. Let's say you're 70, 72, 79, 80. You can technically do a term policy. Even if you're in perfect health, no prescription medicines, no medical diagnoses ever, it's going to be very costly because you're looking at a larger coverage policy. So the insurance company is going to be on the hook for 100, 200, 300, 500,000 more, millions of dollars potentially, but it just depends on what you need. So you need to be in much better health to get a term policy. You need to have a health rating, generally of anywhere from standard to standard on up, standard plus. And the health ratings go up. Generally, there are about 5 or 6 health ratings. The lowest health ratings are generally a graded or return of premium whole life policy. Return of premium term is a good thing. That's a different thing. But return of premium are graded for a whole life policy. Generally, they're seeing some health issues they're concerned about, and they're not going to approve you at a lower cost. So the price will be higher because they see you as a higher risk. If you're looking at standard, that's kind of an average health rating. And it's neither good nor bad, it's just the most common. So most policies are going to fall in that category. They're going to be standard. Standard plus is a above average health rating. In order to get that and anything above that level, it needs to be a fully underwritten policy. Generally, you see these with term policies, not with whole life, although there are some exceptions to that as well. There are healthier ratings with whole life as well. Now, preferred is a real common health rating for people that are real healthy, that you don't have to be in perfect health to get a preferred rating. In fact, given our access that our company has to so many different insurance companies, we can generally put someone into a preferred rated policy, which lowers your price, even if you have health problems. So even if you have blood pressure issues, cholesterol issues, diabetes, potentially some heart issues, depending upon what they are, potentially some kidney, liver, lung issues, depending upon what they are. Even if it's a long list of prescription medicines, we can usually get people into a preferred rating just because we have great access to all these companies. And that's really the key in getting the best price. So when you sit with someone, you want to make sure that they have tremendous access. Lots of companies they can pull from, not one company or 2 or 3 companies, but quite a few. That's going to get you that highest health rating possible. Now, there's also, depending upon the company, something like super preferred or preferred plus. They're generally the same thing. That is the healthiest rating that you can get in the country. Now, it's difficult to approve at that health rating. And again, you want to have access to a lot of companies so that depending upon, and this gets a little more complicated here, and check out my other videos that go into risk rating and actuarial tables. But depending upon the company's actuarial tables, which is how they determine what risk they're willing to accept in order to approve you. Depending upon their actuarial tables, you may be able to get that preferred plus or super preferred rating, or you may not. And so again, this is why you want to have this access. If you can get that highest health rating, your price is going to be 1/3 the cost of a standard health rating. I mean, it's significantly lower cost. So it's a big deal if you can get that rating you want to. So you want to sit with someone who knows the industry, they know the business, they have access to a lot of companies, and hopefully they can put you in that healthiest rating possible. It's going to save your family significant money. It's the difference of, and this is not uncommon in my appointments, it's the difference between $300 in premiums, where you're really only insuring one person where they want to be, or $300 in premiums where you've got husband and wife both insured for the maximum amounts and having an accidental policy that's wrapped around both of them to boot. And so you can have 3 or 4 times the coverage at the same cost just by adjusting that health rating. So make sure that you've got someone that has that access to do that for you. It's a lot easier to spend money than to earn money. So that being said, this is Chad McMahon again with Protect with Insurance in beautiful Prescott Valley. And thanks for sharing this time for me. Let me know what I can do for you. Take care.